There are hundreds of users out there being tax-savvy advisors, capturing data from their clients that they'll now always have on hand. I'll show you how it all works and also show you what else we've built into it already. For those who haven't tried it yet, the experience is really simple to start. You take your client's 1040, drop it into Nitrogen, and Nucleus goes to work behind the scenes, turning that static PDF into something usable. What you get first is the Tax Snapshot, clean, visual, and client-friendly. And now I can walk through my client's return. I asked her to send it over, dropped it in, and here's what we get. Up top are the fundamentals: filing status, residence, total taxes paid, plus brackets and capital gains. It's all organized and client-friendly. To the right is her income illustration, where I can toggle between total income and taxable income. Total income shows everything coming into the household. Taxable income shows what the IRS actually taxes. That gap becomes a powerful teaching moment where planning opportunities start to surface. Below that, we visualize her marginal and effective rates, capital gains, and state taxes, answering the two questions clients always ask: what's my bracket and what am I actually paying? Then deductions. Diane itemized, and we can clearly show why that mattered and how her donations really made a difference. And we even illustrate how that giving stacks up against IRS limits, which opens the door to bigger conversations, like how do we make your generosity go farther? For clients who care about giving, this is huge. You're helping them make a difference. This next section can spark some great conversations. When we look at interests and dividends the client was paid, it gives you a solid data point on where their money is at. Because as we like to say, Schedule B, don't lie. And notice how we flag a couple things for you. If there's evidence of a real high cash balance, I can say, hey, these assets of yours may be earning interest, but they're literally a risk number 1. Let's talk about whether they should be. And when I see an institution I don't recognize, I can ask if there's an account here we haven't analyzed, and whether we should see what its risk number is and what kind of impact it has on the overall portfolio risk number. That's where the magic happens, and you get an opportunity to move toward more holistic management. Because you know there's nothing better than Risk Center to convert held away assets, but now Tax Center can help you discover those opportunities in the first place. Then we also see modified adjusted gross income, visualized clearly so we know which benefits she qualifies for, is phasing out of, or has lost. We also illustrate Medicare premiums Part B and Part D, and how managing AGI can keep her out of IRMA surcharges. No surprises at 65. And finally, we show her safe harbor target. If she hits this number through withholding or estimates, she avoids underpayment penalties. Clear, no guesswork. With one drag and drop, you now understand your client at a deeper level, and the conversations this sparks are incredibly powerful. But that's just the snapshot. Tax Center also delivers AI-enabled insights, your advisor-only strategy engine. The snapshot is for you and your client. Insights are your secret weapon. For this client, we're seeing loss harvesting opportunities. She realized meaningful gains in the 15% band last year. Harvesting losses in taxable accounts could reduce her next bill, and we can expand the section to see the data behind the suggestion. HSA and FSA opportunities. Healthcare drove a large share of itemized deductions, and based on her Magi tiers, she may benefit from additional tax advantage strategies. Charitable planning ideas. She still has giving capacity. A donor-advised fund could help, and pairing appreciated stock gifts with Roth conversions may offset bracket creep. And that's just one client. Across clients, you'll see insights around investments, retirement income, deductions, credits, payments, passive income, real estate, each tailored uniquely to the individual. At our last event, we also released a new report element called Transitions and Taxes, which ties the tax conversation together with your investment proposal. Because here's the deal, nothing drives urgency in getting from a current portfolio to a proposed one like the risk number, right? It's that catalyst moment when someone wants to go with your risk-aligned plan right away. But sometimes it's not in their best interest to take them from a risk 89 to a risk 48 overnight. In fact, it could be a total tax nightmare to do that, right? Well, this new report element helps you illustrate the impact of different strategies. Looking all the way to the right, I can see that immediate action can get us to a risk 48 right away, but it's going to cost us quite a bit in taxes. I can avoid those kind of taxes when we look at the deferred strategy, but that means our first step is getting to a risk 78, which is better than where we're at today, but still pretty high. The gradual transition in the middle gives me a more phased approach that gets us to a risk 63 in the short term with moderate taxes, and then goes from there. We don't make you punch in a bunch of extra data to generate this, and we aren't trying to predict market timing or the future. We just use ranges to get the client to understand that whatever happens next is dynamic, and that it's okay for the risk number to change over time, and that their advisor is tax aware and acting in their best interest. Now let's talk about what's brand new. We've been building tax analytics that aren't just about the past, but about the future, for those what-if scenarios. First up, let's look at our new Roth conversion calculator. Now, there are a few things that set ours apart. For one, my client is already loaded in. Her accounts are there, her tax bracket's there, and we already know which of her accounts are eligible to convert. So I'm not here filling out a form, I'm running a real analysis on a real client. I pick how much to convert. We can do a lump sum this year or spread it across multiple years. The calculator immediately gives me 3 numbers: what it costs her today, what it saves her in retirement, and when she breaks even. That last number is the catalyst moment where she understands what a conversion means for her. But the piece I love the most is the death benefit comparison. A Roth conversion doesn't just save my client money, it saves her beneficiaries money. The calculator shows exactly what her heirs inherit in the Roth scenario versus the traditional one, after taxes in real dollars. When clients see that number, something shifts. Now, we built 2 new illustrations that come with this. The first is a lifetime taxes chart. 2 lines over time, Roth and traditional. The Roth line is higher early. She's paying taxes now, but it flattens. The traditional line keeps climbing in retirement because those distributions are fully taxable. The crossover point is the whole story. Clients get it immediately, no financial background required. The second is account value versus tax liability. This is a bar chart that shows not just how her account grows over time, but how her tax liability grows alongside it. Because the traditional IRA has a tax liability sitting inside it. Money she thinks she has that she doesn't. Seeing that visually is different than talking about it in the abstract. And all of this is printable, by the way. The Roth conversion calculator results are now a full report element. You can pull them straight into any client report, so the conversation lives beyond the meeting and becomes a part of the plan. Okay, last thing. This one's the biggest. It's been our number 1 request after Roth conversions and tax transition analysis, and we call it tax scenarios. Instead of just showing my client what her tax picture looks like today, you can run what if in real time. What if she gets married and files jointly? What if we take more income this year before she hits 73 and RMDs kick in? What if we take on more in capital gains? You adjust the inputs, the snapshot recalculates, before and after with real, clear deltas so you can illustrate what changes. This turns the tax conversation from a once-a-year obligation into something you can have anytime a life event changes the picture. Tax Center has always been about making advisors more tax aware. Scenarios makes you proactive.
Tax Center is one of the fastest growing products we've ever launched, and today it's taking 3 big steps forward. Let's start with Nucleus and Tax Center. The magic of Tax Center has always been the simple starting point. Take your client's 1040, drop it in, and let Nucleus translate it into the tax illustrations and insights. Now Nucleus helps keep that conversation going, because now you can talk directly to it about your client's tax situation anywhere you are. Watch. I'm working with my client Maria. I just got her tax return, and I'm going to hand the PDF straight to Nucleus, the same way Chris handed it a brokerage statement earlier. Nucleus recognizes it's a tax return, asks me for just the essentials. filing status, state of residence, date of birth, and the tax year. That's it. And it goes to work, extracting, structuring, and normalizing everything into Maria's Tax Snapshot. The same clean, visual, client-friendly snapshot you've seen before. Brackets, income illustrations, deductions, Magi, Medicare premiums, Safe Harbor, now built for you by Nucleus in the background while you move on to the next thing. And Nucleus doesn't stop at reading documents. It now drives our planning tools too. You remember our Roth conversion calculator from the spring event? Powerful, but like every calculator, it wants inputs. So now, instead of filling out a form, I can just describe the client. Maria wants to convert her traditional IRA to Roth over the next 5 years. Paying taxes from her brokerage account, she retires in 2031. Nucleus pulls what it already knows, her age, her accounts, her rates from the snapshot, asks me for only what's genuinely missing, and hands me back a fully built, ready to review conversion scenario. I review it, tweak it, run it. The analysis is still deterministic, still our proven methodology. Nucleus just did the data entry for me. Next, Tax Scenarios goes multi-state. At our last event, we launched Tax Scenarios, the ability to ask, what if, on a client's actual tax picture, and watch the snapshot recalculate. What if she files jointly? What if we realize more gains this year? You've been running thousands of these. But what if you told us the number one what if clients actually ask about is a where? What if we move? Until today, Tax Scenarios could only answer with the federal half of that story. So today, Tax Scenarios gets state taxes. Let me show you with my clients Ray and Cindy. They're 2 years from retirement in California, and they're dreaming about Tennessee. Their state comes in automatically from their 1040, and now, right here in the scenario controls, there's a new state of residence option. I select Tennessee, and look at this. Federal tax, state tax, combined effective rate, and the bottom line, what this move means for their net income in real dollars side by side. And we don't just take federal taxable income and slap a different bracket on it. Every state plays by its own rules, and the engine rebuilds the client's state taxable income from their actual 1040 line items, state by state. Which states exempt Social Security? Which states exclude retirement income? Some, nearly all of it. How each state treats capital gains. California taxes them as ordinary income. Other states give them preferential treatment. Some don't touch them at all. You can even trace it back to the inputs, line by line, straight back to the inputs on the 1040. Ray and Cindy aren't just dreaming about Tennessee anymore. They're looking at the actual number that dream is worth every year. And their advisor is the one who showed them. That's a catalyst moment. Now, don't just take my word on all this tax stuff. We wanted a real tax professional to put this through its paces. So we asked one of the most respected CPAs in the financial advisor world. Stephen Jarvis is the founder and head CPA at Retirement Tax Services, where his team works with financial advisors and their clients across the country. He co-hosts the Retirement Tax Podcast. He's the author of Don't Get Killed on Taxes. And this is the part I love. He spent the past months working directly with our product team on testing and development, which makes him the very first tax professional in the world to use what you're seeing today. Here's what Stephen thinks.
Consumers increasingly expect the financial professionals in their life to be able to talk about taxes. And one of the biggest challenges is the fact that the 1040 was clearly not designed with the user experience in mind. So one of the things that immediately stood out to me about the Tax Center and what I've loved about working in it is that it is so clearly designed to help facilitate conversations that actually matter. Rather than having to pick up a 1040 and explain the labyrinth of that document to a consumer, a financial advisor can drop that 1040 into the Tax Center and have this snapshot that really focuses on and helps facilitate these conversations that actually impact that consumer, that prospect, that client, whoever it might be. I love the emphasis on the areas where the decisions need to be made and modeling the impact that those different decisions will have. As I use the Tax Center to model different scenarios, I love what it means for printing that off and having a conversation with a client, letting them better understand how their taxes currently work and what working together on a proactive plan can mean for their financial outcome. At the end of the day, we should be focused on helping clients keep as much of their hard-earned money as possible. And for that to happen effectively and consistently, we have to have tools like the Tax Center Snapshot that allow us to take complex topics and explain them in a way that's going to help people take action. I don't, to help financial advisors have these conversations, they don't need to be able to recreate an entire 1040. They don't need to understand all the 80,000 pages of the tax code. They need to be able to focus in for particular clients, say for Bob and Sue or whatever set of clients it is, and say, okay, here's what your 1040 meant last year in tangible ways. Here's where we can make decisions and where we can have an impact going forward. And then being able to flip that and model it and say, okay, here was last year, here's what next year is going to look like. And here's these graphics, these images that help us understand what that means. That's where I get excited. And that's where I see action taking place and changes happening for a client's future. So I'm excited for where it is today and what it means for those conversations, and even more excited for where it's headed.
Stephen, thank you for the testing, the feedback, the tough questions, and making our product better. Advisors, if you want to go deeper on tax planning as a service, Retirement Tax Services is a fantastic follow. And now, I have one more thing in Tax Center, and it's a big one. For years, advisors have told us, I can see my client's whole portfolio in nitrogen, every account, every holding. Can you help me figure out if the right investments are sitting in the right accounts? Because your clients don't just have a portfolio. They have taxable accounts, IRAs, Roths, and where the investment lives can matter almost as much as what it is. Today, Tax Center answers that question. Introducing Tax Location. Let me pull up the Delgado household. 3 account types: a taxable brokerage, a traditional IRA, and a Roth. Up top, the headline. The dashboard estimates the Delgados have quite a bit per year in avoidable taxes, and shows me current versus optimized tax spend, along with their full tax geography, how their assets split across taxable, tax-deferred, and tax-exempt accounts. Below that is my new favorite visual, a flowchart showing where the assets sit today and where they'd ideally live. You can see the story at a glance, and then the ranked opportunity cards spell it out. One move at a time, their REIT fund is throwing off ordinary income in the taxable account. Sheltering it in the IRA would save them money every year. Meanwhile, there are municipal bonds sitting inside the IRA where the whole tax advantage is wasted. Those belong in the taxable account. And their highest growth fund? That's a prime candidate for the Roth, where their compounding is never taxed at all. Every card gives you the holding, the recommended account, the estimated annual savings, and a plain English explanation you can read to the client word for word. And for the compliance-minded, which should be all of us, these recommendations come from a documented, rules-based methodology. Deterministic math, not AI improvisation. And if an account's registration type is unknown, the dashboard flags it, so you know exactly what to confirm. And since Nucleus is now smarter than ever when it comes to taxes, it can surface these tax location opportunities for you when you're preparing for a meeting. Now I won't miss an opportunity to tell the Delgados they've got a material amount of annual taxes they could legally avoid. So, Nucleus and Tax Center, state taxes in tax scenarios, and now Tax Location. The most complete tax story we've ever shipped in a single event.